Hey, very good morning to all of you. You're watching Hot Stocks right here on ET Nine, the Mumbai News Center. I'm Tanveer Jain.
And I'm Neeraj Shah, and it's a 1% gain for the market in today's session. No prizes for guessing that banking has staged a bit of a bounce back. ICICI Bank, of course, continues to rise. Axis Bank does well. There's strength seen in select stocks like L&T, for example, or a BHEL. So some heavyweights participating in the uptick in today's trade. So good going for select stocks in today's trade in the large cap space, though the mid caps are a bit subdued than what we would have otherwise hoped. 4 or 5%, pretty much the order of the day as far as the top gainers on the mid cap index go. Lots of individual stocks. Deccan Chronicle continues to languish, so that is on the downside. But sugar as a pocket has had a fairly good session in trade today. So these stocks will come up on your screen. Deccan Chronicle down 10%. But look at the sugar stocks on the flip side. So there have been select moves that we have seen in trade. Okay, some talk from the Prime Minister. He's saying that, I think the PMO is saying that they have set up a panel, if I'm not wrong, that will come up again, on taxation of IT sector and the development centers. So, okay, so maybe some development centers in the IT space might be subject to a different kind of taxation. This is assuming that the panel which has been formed will probably take some decisions on that regard. So some news bits on that front. We'll wait for more details coming in on that. But suffice to say that the market is doing okay for the time being. The IT stocks are reacting a bit, but we'll wait for more details before we talk more about this in greater detail. But some house views as well which have come up for some specific stocks in today's session.
Oh, absolutely. Let's discuss some of those, starting off with the first house view, which is CLSA, maintaining an underperform rating on Marzi, but has cut the target to 1125 from 1140 earlier. Brokerage has cut FY13 EPS also by almost 14%, factoring in 4 months of production disruption. CLSA believes that Maruti's earnings are in uncharted territory now, as no easy solution to the Manesar plant problems is visible. Even after the plant starts operation, staff costs should structurally rise as Maruti moves away from contractual labor towards permanent labor. Religare, in the meanwhile, has upgraded Indraprastha Gas to a buy. Price target has been set at 300 rupees, expecting potential upside of about 30%. Broker says regulatory risk reward is favorable, while the PNGRB has moved Supreme Court against IGL on tariff regulation. Post the favorable ruling in the Delhi High Court, odds are in IGL's favor.
Okay, let's get across to Darshan and Yatin for giving us a sense of what dealing rooms are recommending in trade today morning. Thanks so much for joining in, both of you. Yatin, start off with you first. What is it that your sources are telling you?
Well, Neeraj, you are mentioning about Deccan Chronicle and how today morning IFCI has filed a winding up petition against the company because the dues have not yet been cleared. Now, I spoke to a couple of banking analysts and, they have given me a breakup as to how much exposure does the banking side have as far as Deccan Chronicle is concerned. We have ICICI Bank, Axis Bank, Canara Bank and Karur Vysya Bank. These are the 4-5 select banks which have a big exposure as far as Deccan Chronicle lending are concerned. We have ICICI Bank, which has exposure of nearly 350 crores towards Deccan Chronicle holdings. We have Axis Bank, which has exposure of nearly 100 crores. And we have Canara Bank, which has an exposure of nearly 75 crores. So, apart from Deccan Chronicle behaving what it is behaving, possibly dealers are anticipating that given the kind of exposure these all banks have, and in a scenario wherein Deccan Chronicle defaults, which it might, according to statements issued by IFCI, all of these banks could suffer as far as their NPAs and asset quality is concerned. So watch out for all of these 1 or 2, 3 banks which will be in focus. However, we have not yet confirmed the figures from the banking companies, but this is what the analysts take is prima facie. Also, Syndicate Bank will come out with the numbers today. 420 crore is the kind of market buzz which is doing rounds in terms of profitability for the bank. The consensus on the street is close to 350 crores in terms of profitability. The stock is nearly up 3% in today's trading session, but dealers are anticipating that post the numbers are declared, possibly another 5 to 6% move on the upside is possibly seen on Syndicate Bank.
All right, Yatin, thanks for that. Before we go across to Darshan, I just want to revisit the IT stocks, which are actually coming off from the day's highs after this notification has come out. The Prime Minister setting up a panel to look into taxation for the IT sector and development sectors. Infosys has come off a bit. You're looking at TCS, Wipro, all the other stocks are also coming off. Remember, these are cash-rich companies. They're sitting on a lot of cash as assets on their balance sheet, and also the profitability, despite the slowdown, is something that is still drawing less tax than what the other industries are facing right now. So 1220 on TCS, it's stepping lower as we speak. Darshan, come to you. What is it that your dealers are recommending?
Tanveer, Bank of Baroda will come out with numbers today, and a lot of dealers have indicated that a couple of these big HNIs have put shorting orders at higher levels because the numbers as the other PSU number, the profit number, the street buzz is around 1200 crores. That is something that is doing the rounds on the street, but it may come in, but the main important factor for PSU banks at this point of time is the asset quality. Like we saw several PNB, IOP, all these counters on Friday, even though some of them came out with decent profit numbers, because of the asset quality, the stock fell. So clearly they are using the same logic here. They are feeling that there will be pressure on the asset quality. Right. The next one is the ICICI Bank, in which a lot of brokerages have come out with positive views, and a lot of these foreign funds are accumulating ICICI Bank.
Darshan and Yatin, thanks so much for joining us and giving us that perspective. Okay, some more voices and on the flashes of your screen, just to understand how important this is. Bobby Parekh joins us right now on the phone line. Thanks so much for joining in. Just wondering, we've got some news bits here which say that the Prime Minister panel is saying, and the Prime Minister rather has formed a taxation panel to look at the taxation on the IT sector and development centers. Have you heard anything to this effect? Something of this may be formed? And what's the nature of this panel being set up, if you have any idea of this, Bobby?
Actually, I don't have any specific information on the panel, so this is all new, and to that extent, I'm sort of I'm not able to react very specifically to what this panel might be tasked with doing. But at a general level, from an IT sector perspective, there have been a few things which have been which have sort of been discussed in the context of the sector, and it's possible that that is what the PM may have in mind in terms of constituting the panel. One of the things which has been discussed is reviewing the functioning of SEZs, and to as a part of that, to review what the minimum size requirements for SEZs are and whether those should be reviewed, and that can have an implication on the IT sector because they are large users of SEZs. So that could potentially be one. The other area that's been discussed for the IT sector quite a lot is this whole area of transfer pricing and disputes on transfer pricing that have been occurring. And there have been discussions about trying to create some kind of a safe harbor for the IT sector. That hasn't happened so far, and that could be one other area that the government may be wanting to review. And very specifically on IT sector, there have been large tax adjustments which have been made on companies exporting software, and whether on-site services rendered by these companies at client locations qualify as exports. Now, this is an industry model that's been running for a number of years, and this has been reported and expressed as described as exports all along. But there have been recent cases where the revenue sort of looked at it and said that this is not a qualifying export, and that's created large tax assessments for a number of the large exporting companies. So I think these are the 2-3 things which are off the top of my head which I can think of, which are issues around the IT sector. And some of these may form part of what the committee is looking at. Right.
Do you also feel that this tax panel will discuss issues which have been brought up in the past on how a lot of these IT companies are sitting on high cash levels on their assets, how their the percentage of tax that they give is lesser than other industries, the tax benefits that they enjoy, those may be relooked at?
Well, I think that is for all those reasons. There was a sunset clause put onto the export benefits, and those export benefits have since lapsed for many companies. So there has been that thinking. Now, this policy is always going to be a dynamic issue. There was a thought that at some stage all these companies should start paying tax, and that they should get some benefits for a period of time, after which they should pay tax like any other company. There was an announced sunset period that was rolled over a few times, but since then, now it's been done, it's over, and I think life has moved on. So I don't know if I don't know if that's going to form part of this review panel's brief as to whether they should reinstate exemption, which is something which has already been now withdrawn.
Bobby, is there a sense that the government may be looking to raise additional resources from sectors which are seemingly in better health than others? Could that be a move?
I very much doubt. I mean, I doubt if this is, so again, not knowing what the brief of this committee
Sure,
is,
of
but
course.
I would very much doubt that, that if there's a committee which is set up, it's set up to see how they can get more tax revenues out of a sector. So I can't imagine that would be the objective of this committee. I would imagine that if there is a committee being set up, then at least generally sort of looking at the way that the PMO has been approaching the tax issues, it is, I think the objective seems to be to try and be facilitative and try and see where there are pain points and what can be alleviated rather than something which is sort of a organized move to try and see if there is ways in which we can get more tax revenue out
No,
of
the nature of my question was not really to see if there is an organized move to do that, but just if indeed, I mean, it's happened in the past wherein, say for example, the tax holidays on SEZs passed away and then that has led to additional revenues that has come in for the government. So maybe the government is looking at where all can additional resources come in.
Yeah, but then why single IT out in that sense? I mean, it's, they have cash, but if there are benefits that they have, those benefits are available under provisions and schemes that the government has formulated. And in fact, it would sort of contradict, lots of the comments that have been coming out in the press, at least in terms of reviewing SEZ policy to make it more conducive for industries to get into SEZs. So it somehow seems to run counter to what's at least playing out in terms of thoughts, if any credibility is to be attached to those kinds of statements that have been on for some time now.
So you think broadly the setting up of this panel would be constructive in ways of identifying loopholes and perhaps helping out the sector than really trying to tweak the tax that they're paying out right now?
I would think so. Because, if they have to withdraw benefits, they have. If the SEZs as a set of provisions provide some tax benefit, that's available to whoever is availing it, and it's not only the IT sector. There are other companies that also sit in SEZs, and that benefit also has a sunset to it. So it's not as if it's a perpetual benefit. It will run out at some point in time. So to now, actually, I think there'd be a lot of harm done if there was any effort made to sit and review the existing SEZ policy to try and see if they can constrain benefits, because we have enough angst with retrospective amendments and assurance.
Sure.
So I can't imagine. I would think that it would be completely wrong if they try to now review this policy and say that actually it's benefiting too many people and we should try and change it, notwithstanding the fact that people have gone in and established based on certain set of provisions that were held out to them.
Okay, Bobby, leave it at that. Thanks so much for joining us for this quick perspective. More updates on this, of course, as and when more clarity comes out. But Bobby Parikh of BMR doesn't believe that this is essentially a move to extract a larger pound of flesh from sectors which are in better health than others. Take a break on that note. Come back with, of course, the technical checks from our experts. And what we'll do is essentially do a preview of how the monthly auto sales numbers would have looked like. Do a reality check of sorts, get in dealing room or get in dealers who've been looking at various companies and of course selling their cars or products and get a sense from them as to how has the month gone by.